70% of business owners are overpaying on their taxes. Are you one of them? The truth is, most people don't even realize they're leaving thousands of dollars on the table every single year. But here's the good news. You don't have to be one of them. In this video, I'm going to break down exactly how you can legally keep more of your hard-earned money with tax strategies most business owners miss. And trust me, once you see how easy it is, you'll never overpay again. Let's get into it. So why are so many business owners giving the IRS more than they should? It boils down to these 3 mistakes. Mistake number 1 is no proper bookkeeping. If you're not tracking every dollar coming in and out of your business, you're missing deductible expenses. Simple as that. A lot of people just throw everything into a shoebox and call it a day, but that's a huge mistake. You need to track expenses properly, or you're basically burning money. Mistake number 2 is not structuring their business the right way. Your business structure plays a major role in how much you pay in taxes. Many people start as a sole proprietor and stay there forever, not realizing that switching to an S corporation could instantly save them thousands in self-employment taxes. If you don't know which entity is right for you, you're paying too much than you already should. Mistake number 3 is not using tax strategies. Most people think tax season is just about filing paperwork, but what about tax planning? That's where the real savings happen. If you're not implementing the right tax strategies throughout the year, you're handing over extra cash to the IRS for no reason. All right, now that we know the biggest mistakes, let's talk about how to fix them and actually keep more of your money in your pocket. Here's how we was able to save a client $40,000 in taxes by implementing this one strategy. We started with implementing professional bookkeeping for her business. This allowed us to track her monthly performance and uncover some opportunities to lower her tax bill. You can't save what you can't see. This is what it's like working with a tax strategist. Click the link below to schedule your free discovery call today and see how we can do the same for you. Strategy number 1 is keep proper records and use accounting software. First things first, you need clean books. This isn't optional. Invest in accounting software like QuickBooks or Xero, or even hire a bookkeeper. It'll help you track everyday deductible expenses, which means more write-offs and less taxes owed. Let's say you have $10,000 in business expenses. If you don't track them, you're overpaying in taxes by at least $3,000. Depending on your tax rate, that's money you could be reinvesting into your business. Strategy number 2 is choose the right business structure. Switching from an LLC to an S corporation could instantly save you thousands on self-employment taxes. Here's why. With an LLC, you pay self-employment taxes 15.3% on all profits, while an S corp only pays self-employment taxes on a reasonable salary. The rest is taxed at a lower rate. If your business makes $100,000, an LLC owner might pay $15,300 in self-employment taxes alone, but an S corp owner could cut that in half by just taking a $50,000 salary and receiving the rest as distributions. That's a $7,000 savings instantly. Strategy number 3 is use legal tax deductions and credits. Most business owners miss thousands in deductions just because they don't know what's available. Let's fix that. Hidden deductions you might be missing. We'll start with a home office deduction. With your home office, you can write off a part of your rent and your mortgage or slash your mortgage. You also have business meals. Taking a client out, you can write off at least 50% of that meal. You also have car and mileage deductions. If you use your car for business, you get tax savings for that. Retirement contributions, if you contribute to a solo 401k or a SEP IRA, this will reduce your taxable income. Let's say you contribute $20,000 to a solo 401k. That's $20,000 less taxable income, which means thousands in tax savings. So now you know the biggest tax mistakes and how to fix them, but what's next? Here's a quick recap. Track your expenses by using software or hire a bookkeeper. Choose the right structure, business structure, whether that's LLC versus S Corp, can save you thousands, as well as take every legal deduction and credit, which is stop leaving that much money on the table. If this video helped you, make sure you like, subscribe, and drop a comment in the section below if you have any tax questions. Want to save even more? Check out my next video on the tax strategies for every business owner needs. Until next time, stop overpaying and start keeping more of your hard-earned money.